Welcome to this tutorial. Today we'll be talking about support and resistance level. Okay. Support and resistance level are level where the market turns from point of buyers and sellers. Those are other blocks. Okay. While minor support and resistance, I have major support and resistance. And today I want to show you how to draw both. Okay. In a market we have an uptrend which is a buyer trend and a downtrend which is a seller trend. Okay, so let's say for instance we want to draw the major support and resistance here. Okay, we use here and here. Okay, this is like an extreme level in this whole market here. That is in this whole entire area here they were looking at. This is an extreme level and this is also an extreme level. So we also have minor levels. Okay, for instance this is also a level, not like a minor level, but it's also a level because as you can see market touched there and the same thing happened here. So you can see. So support and resistance level, you can see market reverse here, here. So support and resistance level actually is not a line, it's an area. Okay, it's an area, it's not a line, just one line. No, it's a complete area. Okay, so the whole world is looking at that area. I don't know if you get, the whole world is looking at that area. So for instance, this is a ranging market from here to here until the market broke the level with this strong candle. So this is like a breakout, right? This is a breakout candle. So this, and when we are talking about major levels, we have types of tools that will draw lines. We have line tools, trend line, horizontal, vertical, and Fibonacci. So depending on the one you want to use, for instance, let's use this place here. This is the level, right? Now this is how I want to show you guys how we actually draw levels. Okay, sorry, my system is kind of freezing. Okay, this is how we draw a level. Excuse. You draw from the body to the wick. Okay, to the closing of the wick. Here, this is the body. Okay, this is the body of the candle. This is the closest body of the candle. Okay, and this is the last wick. So this whole area, this is an area. Let's go and see what happened. You can see market came into this area, it went back. Market came also and it also went back. You can see what happened here. Market broke. This is a breakout. This is a breakout candle. Market also came back to this level, retest this level, and market went down. This to show that this is a strong level. Now if you are trading, you look for the next order block. That means the next place market is entry from. For instance, this is our order block. This is our order block. This is where people want to sell. Okay, this is how you draw it. You come to the closest wick. This is the highest wick and the closest body. This is the closest body. So this is the area we are trading from. Now you have to wait for the market to close either here, something just at least close to this point, at least close to this point here, or inside this place. Let it not close above here. If you want to go sellers, it has to close. It has to close here. You can see market is rejecting. You can see that to show that there are buyers, there are sellers, there are sellers inside here. So the market has to close. You can see what's happening. You can see rejections from sellers. Buyers are trying. So for those people that want to trade like 5-second confirmation, okay, this is the kind of market that you need to use. Okay, so once your candle close below here, just very close or inside the level, all you need to do, you just change your to 5 seconds confirmation, and you try to find a strong bearish candle inside this box. You can see the market is just rejecting, it's fully rejecting at that level. What you do is you open like this, you can see now it has closed, you can see. So what is happening? So for those people that want to trade this kind of trades, you want to trade anything that has to do with 5-second confirmation, this is what you do. So you wait in between the level and you take a trade. So it just as it is. So the market is what it is, and sometimes you just need to take good trades and you wait for the market. And once the market is right and okay for you, then you take your trade. Okay. So guys, just give me some time. I'm coming. I want to do something. Okay. I want to do something. Just give me some time. So as you can see, we won the trade. Okay, sorry guys, I paused and I went to do something. You can see we took our trade from this candle here. Okay, this candle shows down that the market was going down. So from this level you can easily trade, for those people that want to trade 5-second confirmation. So you trade it from an order block. You trade from an order block where you know buyers and sellers are actually waiting to buy. You don't trade it anyhow. Okay, you make sure it's either an order block or at an extreme level. Okay, now we are going with the trend. Okay, what we did here is we are going with the trend. I'm just explaining. Okay, let's switch to 1 minute here. Okay, you can see the huge candle. This candle came in. So that is how So that is how important, okay, that is how important it is to trade at a support and resistance level. That's how important it is. It's very important to draw your levels very, very clearly. This was a sell zone. Okay, so we had to wait to see a clear seller's candle entry. So we are trading with the trend. As you can see, this is a downtrend. This is it. Sorry, I don't want to take a trade. My is just clear. Okay, let me just keep it here. So as you can see, this is a downtrend. This is a downtrend. So we are going with the trend too. We're expecting markets to come to this level also. Okay, we're expecting market to also come to this level. Then here you don't need to take a trade here. Okay, this, because we are going with the trend, so you have to wait for a breakout. Those people that want to trade breakout, so you have to wait for a breakout here before you take your trade at this level. After the market come here and retest, it's the same thing we did here. Market retest here, it came back and it came again. So this is where we traded, and this is the same thing you're supposed to do here. Don't trade against the trend, because the trend is your friend. Okay, so if you want to draw another level, so let's I'm coming. For instance, these are like minor levels. Okay, these are like minor levels. These are like minor levels. Okay, now like I said, we have, you can see now the market came to this point. The market came here. The market came here. The whole market here. This is like the same level. Okay, so the market came here, it went up, it came down, it still went up, it broke. This is where the market broke out here. This is a breakout candle, this particular candle. So the market came, instead of retesting this level like the trade we took now, the market went up and faked it, because this was a fake breakout. Yes, this is not like, this is the breakout here, this place. this candle is the breakout, okay, of this uptrend. This is the breakout, but originally it was a downtrend. So these two red candles here, let me go back small. Okay, it came down like this. So these two candles here showed that it was a fake breakout, because if it was a real breakout, it was supposed to come for this sell zone, this place here. So the market was supposed to come to this zone here, okay. Then with this zone we can easily trade the kind of trade we did, and we trade in the direction of the trend. But like I said, this showed that it was a fake breakout, so that was why the market came back. It continued the trend downwards, okay. So drawing your levels is very important to know where you enter from, okay. If you want to draw a level, you have to draw a level from a level that is obvious, everybody can see it. You can blindly see the level, because if you cannot blindly see the level, that means that is not a good level. That means that level everybody in the world is watching at that level, and markets will return from that same level, okay. Like for instance, let's say for instance, this is the highest point of the market, this whole market, this is the highest point. So if you want to draw it, you have to do it like this. You have to zoom in, you have to zoom in, you have to come, so alright, so this is the zone of sellers, okay. Now if you want to draw the lowest point of the day, you use this point here, okay. This is the point, the lowest point of the day. This is the point that we can see, that our eyes can see, okay. So we are just using this one. There are other ones, if you zoom back you can see another lowest. Okay, let's use this one. Let's use this one. You can see, so this is the lowest and this is the highest point of this whole market. This was a breakout candle, this is a breakout candle, this is a breakout. This signifies that the market is going up. This candle here, then the market, so this is a breakout, and you can see mainly the market came down to this same zone, retest, is continuing its trend going up. So what I'm trying to say here is you look for a level that is obvious, that the whole world can see, okay. Then you set your levels and you trade from your levels, okay. But don't trade against the trend. This is an uptrend. You should not be trading at the seller's level. You should be trading at buyer's level, because this is an uptrend, okay. This is an uptrend. Now the market came like this, it went up, okay. It came down, it went up, it came down, it went up, it came down, it went up, okay. Because if you are to draw this, we have to draw it like this. This was a breakout, okay. Actually the line, and this was the breakout. Now the line has shown me the breakout. So the market came like this, it went up here, this was the breakout. So it came down again before going up, came down again before going up. Now instead of the market to come and maybe test the level or break the level, now the market started ranging around this axis, going up. Then it started, the trend changed, it became a downtrend. Excuse, sorry. So it became a downtrend. So in this whole market here, this was our breakout, this candle, okay. This was our breakout, this was our breakout candle. This whole market here, this was our breakout. You can see this candle actually broke the level. So those people trading engulfing, you cannot trade an engulfing in an uptrend, okay. You cannot trade a bearish engulfing in an uptrend. This is an uptrend, so this is a red flag. You can see it clearly, an engulfing candle, but you cannot trade it in an uptrend. See that this is why it didn't work. And secondly, the candle closed inside the level, not below the level. Take note, even if you want to take an uptrend, you want to take the risk, it has to close below the level. As you can see, this candle close exactly inside the level. So what am I saying here? What I'm saying is it has to close even if you want to take the risk, but you should not, because this is an uptrend. This is a clear uptrend. Okay, so let's use an horizontal line to draw another trend line. Okay, let's use a trend line. Okay, so if you want to draw a trend line, this is a trend line. So market tested here, it came here again, market tested here, it tested here, and it came here again. You can see market tested here, the same thing happened here. Okay, this is a trend line. Now depending on where you are drawing it, this is an uptrend, and this is what you draw. You draw 1, 2 first touch points. Okay, you don't draw random points. This is 1, 2, 3. This is our touch point. So market went up before coming back to this same point. So this, if you want to trade, this is where you at least trade from this place. Once the market comes down, you see a rejection, maybe an engulfing or is an hanging man or spinning top at this level, then you can go with buyers because you are trading with the trend, not against the trend. Quite alright, the market here started coming down. Okay, started coming down, but the thing is, with the trend line shows this is still an uptrend unless and until the level is broken here, which it is. Okay, it is broken here. You can say the market shows downtrend. The market started going down, started going down, started going down. So the market, the trend changed. Unless and until it breaks the trend line, then you can decide to go with the sellers. But for now, you're going with the buyers. So it is wrong for somebody to trade against the trend. It's not advisable. Okay, don't trade against the trend. Trade with the trend, because the trend is your friend. Let's use, okay, so if you want to use the trend line here, you can do it 2 ways, depending on how, or depending on where you're seeing, you can use here. Okay, so this was our first touch point. This was the first, and this is confirming the second, and this here is also confirming the third. This here is also confirming the third. Okay, for a trend line, you can use just one line. Okay, but for an horizontal line, you have to use a zone. Okay, you have to use a zone. So somewhere, now you can also do this. You can also do this. You can also do this, as you can see. You can also do this, depending on what you want to do. You can also do this, and you can see now the market touched here. Excuse the market. This was the first touch point. This is the second. This is the third, and this is the fourth. You can see. You can see it clearly showed a downtrend. Clearly showed a downtrend. Okay, this showed a clear downtrend. So you can also use it this way, depending on what you want to use. But most people use horizontal lines, but you can also use trend line to know another entry point. Okay, like for instance, if you use a trend line here, this is the first and this is the second. Okay, now let's say let's say you are at this point, you want to trade, you are already at this point, right? You are already at this point. And you want to trade here, exactly this point. You can see it clear. You can see what happens. It ends in between the level. Okay, it ends in between the zone. Okay, I think this is the highest. Yeah, it end. As of then, it will end in between the zone because we draw from the left. Let's say this place has not happened yet, and the bias became this momentum. This bias momentum here is weak completely, and this candle end with a rejection in within the level. So if you zoom this candle, you will see where sellers entered, and you can easily trade with this at the level. So it is easier to trade with the trend. But if you trade against the trend, you are going against the market. This is a downtrend, so you are going with the trend. We are not trading against the market. Okay, so now the market forms higher high, higher low in the market. Okay, this is an uptrend. This is an uptrend. This is an uptrend. So you should be trading as a buyer. If you are trading with the buyers, you should be trading here in the direction of the trend. If you trade here, it's against the trend. Okay, don't trade here. Okay, don't trade here. This is higher high, higher high, higher low, higher high, higher low, higher high, higher low. This is higher high. Okay, so this is an uptrend. You can see this is an uptrend. This is an uptrend. It's clearly an uptrend. So in an uptrend, okay, now you can only draw if you can only go against the trend when you have like 3 touches. You can see we have one here. We have 1, 2, 3. Okay, you can only go for the third one. After you see 1 touch here, 1 touch here, you can go against the trend here. Here you can go with sellers here when you have a third touch. That is the only way, because already it has signified that this is what? This is a resistance level, and from a resistance level, sellers enter in a resistance level. In the support level, that is where buyers enter. Okay, but if you are going with the trend, you have to trade from these levels here, from these levels here. But if you are going with the sellers, it has to be the third touch. Don't trade for the fourth one, because sometimes when you use fourth one, it will not work. It will not work. Sometimes, since the market is going up, it might break and continue going, because that meter has tested 1, 2, 3, 4. So for instance, imagine somebody comes and crack a joke for you. The first time you will laugh and laugh and laugh and laugh and laugh. The second time you will laugh, but not like the first time. The third time also you will laugh, but the laugh, the tempo which you laugh will reduce, right? So most people will not laugh again. You will not even feel like laughing anymore. Okay, so it's the same thing. So once it tests 1, 2, 3, go with the third one, but the fourth one, just let it be, because the market might break. It might just give you a fake out, show you as if it's going down. It will just continue going up in the direction of the trend. So that is for downtrend. So that's for an uptrend, sorry. So for downtrend, market coming down, just use green candle, green. So shows markets actually coming down. So this clearly shows a downtrend. You can see this is a downtrend. So this is the lower high, the lower low. This is lower high, lower low, lower high, lower high, lower low, lower high, lower low. So you should trade with the trend from this level. Okay, from this level, go with sellers. From this level, you can go with sellers. Okay, if you want to go with buyers, you can only take it 1 to the third touch. You can take the third touch. Like I said, you can go with buyers from here, because it has clearly showed that this is a support level. Like I said, buyers enter from support and sellers enters from resistance. So you can go with buyers from here, not here. But it is advisable you go with the trend. Don't go against the trend, because the trend is your friend. If you go against the trend, you have high probability. Okay, you have high probability of losing your trade. Sorry, if you trade against the trend, you have high probabilities of losing your trade. But if you trade with the trend, you have high probability also of winning your trades. So what I'm saying is, please make sure you're going with the trend, not against the trend. So your support and resistance, sometimes you have a ranging market. Okay, sometimes also you have a ranging market. You see market goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. So this is a ranging market. This is a ranging market. It's a ranging market. So it should just be going up and down. So in this kind of a market, you don't trade. You wait. Why do I say you should wait? You wait for a breakout, either in the direct, either down or up here, or the market breaks here, or it breaks like this. You wait for the direction of the trend, so that it breaks the support or it breaks the resistance level here, that it breaks this, or either it breaks here or it breaks here, then you trade. But you can still trade at the support. But what I'm saying is, for people that trade breakouts, okay, you have to wait. You can still trade after this 1, 2, 3. You trade at the third one. After this 1, 2, 3, you can go with buyers here and you can go with sellers here. You can go downwards with seller, you can go upwards with buyers. Okay, so but for those people that want to, if you want to trade with the trend, let's assume this was what? This was an uptrend. Let's assume this was an uptrend, completely an uptrend. So you have to wait to see the directions. Either the market wants to fake out or want to break the market, because you are going with it. So if it breaks out here, it is easier for you to go with the buyers, because initially from this spot it was an uptrend. Okay, so I just want you guys to get that in mind and know the differences. Okay, all right. So please, once again, let me give you a recap. If you want to draw your levels, make sure, let's say you want to draw this level, want to use it as our level, you have to, because in this market, right, we can clearly see the spots here. This down spot we can clearly see here, and also we can clearly see here too. But here market touched so many times, and here this is the highest level. Okay, so what I would advise is, we will have to use, if you want to draw your level, you have to come down. You see from the body, the closest body, this is the closest body to the neck, to the wick, then you draw. Okay, so this is a zone. You can see market came in here, had a rejection and went back. Let's go to the past. You can see market came in, it went. It also came in and went. It came in again and went up. It came in again and went up again, and you can see finally the market broke. It broke. This candle was the breakout, because initially market already have started changing face, started showing us, you understand? So this showed that the market is now a downtrend, because it started creating lower high, lower low, lower yeah, lower high, started creating lower high, lower low, lower high, it created a lower low, and also a lower high. So clearly this is now a downtrend after this breakout. Okay, so you have to wait and see the direction of the market before you trade. Okay, so in this kind of a market you have to wait. Once the market gets to this level here, now the market got here, it was a breakout. Sorry guys, it was a breakout here and the market went up. So that's why I said you have to wait. Once it touch and you see any sign of entry of sellers, because already initially it was on an uptrend, it was a downtrend, so you have to wait. So the market just continue going up. So market can change anytime. So that's it guys, that's